Ladies and gentlemen, welcome to Live the Return TV. My name is Tony, and I'm a professional trader specialized in trading psychology, auction market theory, and order flow. If you're serious about becoming a professional trader, then I invite you to come along this journey with me. Together, we're going to create plans, anticipate scenarios, firm information, and execute at the live edge of the markets while continuously improving as traders. And along the way, we'll start applying what we learn in trading to everyday life. Well, I hope everybody is having a great Sunday evening, depending on where you are in the world. And I look forward to my first live session. I haven't been trading for, I haven't taken an actual trade in the market since 2019. I took my first trade in 1998. So I have been in the industry for a long time. I have made about every single mistake you could possibly imagine. I have blown up accounts. I have taken modest accounts and turned them into 400-500% returns in a matter of weeks. I've been on a trading floor for a top financial institution in the United States. I've been around. I have been around in the markets. And what I'm here to do is to help you create the psychology, the practice, the planning, the execution around these markets at the live edge. What got me into this and wanting to do it live? Well, I work from home and I watch a lot of stuff on social media in terms of TikTok and different things along those lines. And I found streamers streaming about the markets. And I'm like, what are you guys doing? And what are you talking about? And it got me to decide to come in and start doing this on my own. Not because other people are wrong or incorrect, but structure. From what I have seen other people doing, I have not seen them creating a structure for new or developing traders. And that's what I want to do for you, is to help you create a structure that you can use, that you can follow, that you know what the market is doing at all time. Okay? And so we're just going to get into it. And we're going to get into it first every night. What we're going to do, we're going to create our plan for the session. In every single session, we will have a new plan. Why? Because markets are dynamic. They're constantly changing. And if you're not adjusting to current market conditions, you're not going to know how to shift when market conditions shift. Okay? That's what trading is all about. Why don't people have long-term consistency in the markets? Because market conditions change. I believe every single indicator, every single technical analysis, every single fundamental analysis in the markets at some point in time either have worked or work. Okay? Every single one. I don't think that there's a single indicator or anything created that does not work. Question is, and why do I feel that way? Or why do I believe that? Because it wouldn't have been created if it didn't work. Now the question is, what market condition does it work in? Because what I have found in my experience since 98, when I first took my first trade in the markets, my first trade was an option in orange juice. I purchased a put at 104 and I covered it at 78. And then I started day trading. And the first market that I day traded in 98, 99 was pork bellies. How did I get data? Through a company called BMI Satellite that I put on my parents' roof, built a office in the third car garage stall, and built desks out of just regular plywood, with supports on the wall, and connected two monitors to a PC for one of the first times it's ever been done. I was on the phone with Microsoft for hours trying to figure out how to use two video cards to work two external monitors independently. And we finally did. It took about 12 hours. How did I get my fills? The fills came in through a printer. So I had to wait for 20, 40, 60 seconds sometimes before I knew where I was in the market and I was trying to day trade. What does that mean? In a big grand scale of things, I'm an idiot. And I'm willing to try almost anything and everything. And over my course of trading, I worked on trading psychology and trading itself, and spent about $120,000 over a 12-year period on training. And what did that do for me? Gave me a lot of systems and methodologies that work for a period of time, and when market conditions shift, they stop working. What I'm going to teach you is to how to read the markets, how to read price action, and how to convert what's going on at the live edge through order flow. When you put those two things together, this is what happens. You always consistently have a plan. When you have a plan, you can anticipate. And when you're able to anticipate, you confirm. And when you can confirm an area and your anticipation consistent to your plan, now you have a hypothesis. And now your trade is a test of your hypothesis and how well you planned, anticipated, and confirmed current market conditions. And when you execute, you journal. And journaling is the way that you learn. You learn to make changes. You learn to adjust, to adapt, to grow with new information. Not because you made a mistake, not because you did something wrong, because you're learning to develop yourself into a trader that's professional and can consistently stay in the industry for a long period of time. And that is what I'm here to teach you. Okay? So every night, we're going to start with our pre-market analysis sheet. And I'm just so happy to trade NASDAQ. I have more experience trading the ES and bonds, US 30-year treasuries, more than any other asset class out there. Okay? There's a very important reason why I trade the NASDAQ, and we will go into that in future sessions. For now, we do have price action moving, and I do want to get through this. And I want to show you how to create your very own trading plan. So the first thing we're going to do is go into the daily chart. All right. Higher time frames. We always start with higher time frames. Why? This is where we get the information we need in order to be able to start creating a plan. We are not going to go off of a 5-minute, 2-minute chart or some other shorter time frame. We want to know what is happening in the markets right now. So when we look at this chart, it's I already have a lineup here and a couple other things. I was working on some stuff today, but it's a very, very easy to see what type of market condition that we're in right now. Okay. The market condition that we're in at the moment is an imbalanced, trending bull market. And it's not letting me. How do I undo that? I did not want to delete that. Let's see. Aw, I just broke it. Okay. Well, anyways. Good times. See, this is what happens when you start doing something new. Let's do this. Bear with me just for a second. See, this is what happens when you make a mistake. Now, what happens when you make a mistake in trading? Well, normally we get emotional. And when we get emotional, we start revenge trading and doing other things. In this case here, no worries. You know what? Figure out a workaround, get our charts back to where they need to be, and let's move forward. And so here we are. We're going to go back to our daily chart. What we have is a trending market condition with potential balance area forming in current price action. What does balanced trading mean? Well, most individuals look at balanced trading and they say, oh, wow, okay, that's a range, or it's choppy, or it's sideways, okay? The market condition, all right? People say it's choppy, it's sideways, and those type of things because they don't know how to define what they're seeing. And so they're like, oh, wow, that's a choppy market condition. We want to stay out of that. Okay, beautiful. Maybe you do. Maybe you don't. Maybe it's just a case where you need to learn how to recognize the current market condition that you're in and then learn how to trade around that market condition. And so what we have is a balanced market condition, okay? And we're imbalanced higher on our daily chart. And let's just get rid of that. Now we're going to go and we're going to take a look at our longer time frame charts, and we're going to see if we can get any information out of these time frames. And the first thing that we're going to start with is a 240-minute chart. And what we're going to do in the 240-minute chart is we're going to take a look and we're going to say, okay, what is this market condition telling us? And it, again, is telling us the same thing as a daily chart. We are in this longer term, if you will, imbalanced condition higher. So we're trending up. Well, it's been a long time since I used this platform. There's not enough data in it, that's why. We're trending up, and we're in a balanced market condition, trading off of value area high, moving into value area low, and possible unfair lows at lower prices. That's what's going on. And so, again, bring up our little trusty. So we are imbalanced higher in a long-term balanced condition. Okay. And what we can also do too here, if we want to, is we can just put little X's next to each of these, because what we want to do is utilize this information for later, right? When we go in and we're doing our journaling, we want to look at our charts. We want to look at what's going on in the context of our journal. What are we doing? How well are we creating our plans? Do we need to make adjustments to the way that we're creating our plans? Not just about execution. Everything you do in the markets matter, from when you first walk into your office and you sit behind your monitors to the moment you get up, you're done trading for the day. From those two, from that starting point to that end point, everything in between matters extensively. Why? Because everything that you do between those two moments determines your results. And if you want to get good at something, you need to figure out what it is that you're doing and how you're doing it. Take a look at your results. Are your results aligned to your objectives and your goals? If not, you need to make adjustments. What do most people do? They don't have a plan, or if they do, it's just an execution plan, if you will. And then they execute. And then they make up stories in their minds of why they got the results that they did. And that creates extremely emotional trading. You don't know what's going on, and it creates a lot of confusion. Where there's confusion, there's unknown. Where there's an unknown and confusion, your mind is not sound. Your body is signaling stress. The central nervous system picks up that stress signal, sends a signal to the brain. The brain starts to work strategies to alleviate the stress. And if you consciously want to do something like trading and make money at trading, your central nervous system and subconscious processes are going to keep the conscious mind from engaging in action in the present moment. What does this mean? That means that all of your actions are going to be based on the programming. And so if you're not paying attention to what you're doing in trading from the moment you sit down at your desk, the moment you get up, you're not going to realize what's happening in those moments. And if you're not aware of what's happening in those moments, you can't bring conscious thoughts, consciousness online in the present moment and start acting and taking action consistent to what you want. Rather, your subconscious programming and central nervous system are going to make all those decisions for you. This is why most people do not get the results in life that they want. Forget trading for a moment. It's about life. Why don't we make the changes in our life to get to the places we want to be? Because we have subconscious processes in the central nervous system engaging in action before conscious thought, conscious intention comes online. And if we have processes that are constantly engaging in action before consciousness engages in action, we're going to get results aligned to whatever our subconscious processes and central nervous system are aligned to create. And this is why we create the same thing over and over in our lives, even though we want different results. If you can understand that concept, trading and life become much easier, because now it's all about engaging the conscious mind and the task at hand, allowing you to take action toward your intention, not to whatever destination your subconscious processes are designed to lead you. Sorry, I went on a rant there. That's important. Extremely important. Then we're going to go to a shorter time frame chart. This is a 30-minute chart. What is the 30-minute telling us? Well, it's telling us that we are still in an imbalanced market condition higher. We're at here as of May 10th, which is about a week ago. We are in a balanced market condition, and we've been trading in that balanced market condition for about a week. All right. Now we're trading in what people would say a range. This range is actually value in between this green line here, which is value area low, green line here, value area high. The pink line, magenta, is your VPOC, right? Is a volume point of control. It's where most of the trades have taken place in this time frame, in this range. And then you've got the weighted volume moving average, basically. So what it's taking is it's taking the weighted volume for each price and it's putting it into this line. Those are VWAP is what it is. But it's not a VWAP based upon all of time. It's VWAP based upon the range that you're interested in. And I will definitely be teaching everybody how to create these developing profiles over time. All right. And so now we have our market conditions. We know that every single one of our market conditions is telling us that we are balanced and trending higher. We don't even need to look at really anything else. Now, expected scenarios. Because we are trading in balance, so trading in balanced conditions, currently developing balance within an overall trending imbalanced higher market condition. These might be terms that you're not used to in the trading world, What do these terms mean? Trading in balance, trading in a range. We are currently developing that range within an overall trending market condition and trending higher. That's all it's saying, okay? I'm just utilizing auction market theory verbiage because that verbiage helps us create the structure which we're going to use to develop the plan, right? Market is currently trading within value area high, value area low ranges on all time frames. Daily chart, 240, the 60, the 90, the 30 are all trading within value right now. Okay. Price action is currently trading towards value area low on daily chart, and mid time frames are currently trading between value area low and VPOC. Most recently have not moved down into value area low and low volume nodes. Let's get into what this means, because this is extremely important in creating our structure as well. Value area low, value area high. What are we basically saying here? We're saying we have a bell curve. The bell curve is volume. All this gray is volume, okay? In this bell curve, we're saying 70% of price action has traded within this range, and that means 15% has traded above and 15% has traded below. And in that context, we've been trading within value area high, value area low. We broke out of value area low on May 12th, okay, to find support in a low volume node that moved price back up to VPOC, almost to value area high, retrace back to value area low to move back into value area high, unable to create range extensions to continue the trend, even in higher highs. I'm not saying this is a top. What I'm saying is we broke highs and we failed and moved back into lower areas of value. What this is telling me is the market is not currently trending in an uptrend. We made a higher high and we're coming back and testing lows. Higher highs, higher lows is an uptrend. That's an imbalanced market condition higher. We are currently not doing that. Does that mean that the market's not going to do it again? No. We can easily bounce off these areas, break through these highs, and continue to trend higher. 100%. What are we doing right now? We're not doing that. We're trading in value, in a range. So where are areas of interest? Well, in areas of rejection. How do we know where rejection has been taken place on this chart? We look at the low volume areas. The low volume areas are where price moved away from those areas quickly. Where's your high volume area? This is where price gravitated to and traded around. Tight range, broke out of the range, moving up to value area high from where? A prior range extension, creating a possible continuation of an imbalanced trend higher. What happened? We got through VPOC, came up to value area high, rejected around this low volume node, came in, and traded back to value area low. We rejected VPOC, where more volume is traded than at any other price, and came down and tested lower lows. Rejected those lower lows, found buyers, and moved price higher back into VPOC, retesting value area low, finding buyers again, making a higher high. Coming back, moving back into value, finding support value area high, coming up to create a new imbalanced market condition higher, a breakout. That breakout failed, and now we're moving back into value area low areas. That's what's going on in the market condition. We're not trading in a range, we are trading in value. And so what do I want to see this market do? Well, this market's going to do what it's going to do. But what we can say based off of the information that we have right now, we can say we want to watch price action. Price action. Get the right color here so I don't confuse anybody. Price action can move higher from where it is. Price action can move lower from where it is. Price action can stay in this range. Price action can break out of this range and do all sorts of stuff. Okay? The point in trading is this. Every single tick provides an opportunity. Problem is, there isn't, people think, oh, well, there's not enough opportunity. Yeah, in trading, there's too much opportunity because every tick represents a possible decision point. Because every single tick, you could possibly enter the market for whatever reason. It's not that you want to find entry points, it's you want to find reasons to stay out of the market. That way, when price comes to your area of interest, you can anticipate what it does next. Okay? Not what it could do, not what it might do, what you anticipate it to do based upon your plan. So if price action stays in this range between value area high and value area low, I'm not interested in playing. Those just flat tells me right there, I don't even want to be in this market condition. Okay, I don't want to trade in here. Why? Because I can't get a good gauge in where my stop should be and where I'm wrong in the position. Why enter a position if you don't know where you're wrong? And when you do define you're wrong, and if you entered at a price where it's too high or too low, be able to withstand that risk, then why are you entering the market at that time? Because you're already entering in a place where you can't manage the risk from where you're wrong. Give you an example. Let's go back to the daily chart real quick. The daily chart. If you're looking at higher highs and higher lows, where are you wrong in this market if you try to go long up here? Where is it that you could say, okay, if the market breaks this point, then I probably don't want to be long anymore? Probably down here. This is such a strong up move right now. You could possibly say, okay, a break below this low is wrong, or a break below this low is wrong. Why all the way down here? Because price action's making higher highs, higher lows, and you need lower lows to break a trend. Well, does this breaking this low here break a trend? How about this low? How about this low? How about this low? Why not this low? Why not this one? Right? Which low are you wrong? Well, if you can't even define that, you can't even define where you're wrong. And if you don't know where you're wrong in the charts, why are you trading in the first place? I'm not trying to challenge anybody here. What I'm doing is trying to point out the obvious in trading, why trading is so difficult for most people, and how do we create clarity, get to the results that we want to. If you intend to be a profitable trader, then you need to consciously take action to engage in the markets at times where you know you have an edge. How do you know when you have an edge? Because you know where you're wrong, and you know that you can put your stop down there where you're wrong, and you will be out of the market when you're wrong. You can wait and assess. Why? Because the market is shifting conditions at your place of being wrong. And if your stop is placed at any price or any place where it's not based upon a market shift, then you're guessing. And if you're guessing and trading is it's easier to go gamble on black and red at a casino and with better odds than trying to guess what price action is going to do within this type of market condition. You're guessing. And then when you're guessing, you wonder why your stops are getting hit. Let's go back to the price action. Price I do not like this. If anybody has any suggestions on a good screen annotation, please let me know, because this one's terrible. Anyways, I just don't like this one. It's not user friendly. So what I have to do is create a plan of where I'm going to be interested in taking positions in the market. If price action breaks this low, pulls back into this area, I'm willing to take a short position. If price action let's use red. Comes up through here. Want to see a pullback. And I can enter around this area. I can at least start looking for entries on this area from a pullback. Doesn't mean that I see a bar like this come into my area, it closes up here, and I'm going long. No, I want to see price come back, retest the low of this range, move higher. Why do I want to see a retest? Because my stop is going to be around this area. If I'm in for a long position through here and price action starts to accept at lower prices, chances are that low is going to be taken out. Market is shifting what I was anticipating it to do. My theory, my hypothesis in the market is wrong. My hypothesis is incorrect. I want to be out. Gives me my decision points and zones for being in and out of the market. I don't want to guess. I want to know. And then here, price action break down, come through. And now I want to look at potential shorts coming out of this area right here. Okay. And look, price action came through, almost tested, came through, made a higher high from this high here, made a higher high, rejected. That's a reason to enter. Am I entering because of this red bar? No, I'm entering because we are coming back. We came through. We did a breakout. We moved back into VPOC. Price action is accepting lower. Price action comes up higher, rejects out of an area, not near enough for my area for me to be able to manage my risk properly. So I'm waiting for a tighter pullback. Price action breaks the high and rejects. This would be a good reason for me to be looking for a potential short. if it was in my trading time frame. And so I'm looking for short positions out of here, and I'm looking for long positions out of here, and I'm looking for short positions out of here. And then we have one more scenario that I'm looking for. Price action to break up through here, close above these highs, pull back, into the area. We can anticipate potential price action the upside. And in this context, do I want to say, oh, green shoots, and I'm just waiting for price action to break out of my highs? No. Why? Because of the failure here. All right. Because we've already tried to do a range extension in exploratory highs, right? What are exploratory highs? All-time highs, which is haven't ever been up here before. Okay, look, no volume up here. Why? Because price has never traded up here before. Price is exploring new highs. It's not at all-time highs. Like when this was a high at all-time highs, well, all of these are all-time highs, sure. But every price now is all-time highs. What we're doing is we're exploring new highs, exploratory highs, right? So price action moves into the exploratory highs, comes in, does a false breakout, moves back to the other side of value. That's extremely important. And now we can't even make higher highs. We're rotating back into the lows after we tested lower lows. And if we break these lows in here and we continue down, then we are in a short-term imbalanced market condition lower, and we want to look at potential shorts in the market if that were to happen. Okay? And so I could put a line here, come in and down. I'm not interested in trying to do that out of this area because we've already tested it and there's potentials for longs. I don't want to buy here because we did break it before. What I want to do is wait for the pullback into this area, go long. I didn't document that very well on this little line thing that I'm doing here. So let's create that scenario as well. And now this becomes my trading plan. And so what do I do once I have a trading plan? Take a screenshot. There it is. I come over here and I'm going to save this. 0517-2026. And then I want and now if price action starts moving and at any time I forget what I'm interested in or what areas I'm interested in, I have my trading plan up here. And I can go to my trading plan anytime I want to, review it, and we're good to go. Now I have 25 minutes before I'm interested in potentially starting to take trades in the Asian session. And so there's two things I want to do is one, I'm going to go through and explain to you why I'm trading in the Asian sessions. And then I'm going to do a process so I can interrupt the subconscious processes that normally take action, and I can bring conscious thought, conscious intention back online. All right. And this is a process that I've created for myself that I want to share with everybody, because for me, it works extremely well. for other people that I have taught this method to, it's worked for them as well. And really what it is, it's about reconnecting to the present moment, but not as an idea, not in stillness, not in meditation, physically connecting to the present moment. And when we can do that, it's no longer a part of our mind. It's not something we're thinking about. It's something we just do. We physically feel it. It's a somatic practice at that point. Now we know when we're in it. We're not questioning, oh, well, am I there? Am I in the present moment? What's going on? We don't have those questions because we know. And when you know something, you start to trust it. And you can start trusting yourself again to follow your intention. Life, trading, all of it becomes a heck of a lot easier. Everything becomes easier when you can trust yourself because you're no longer doubting yourself. It's not positive mental mindset. It's not a mindset shift. It's allowing conscious intention to come online, direct action. You want an example? As a trader, how many times have you had a trade as part of your plan and you didn't take it because you talked yourself out of it? Or maybe you saw something in the market, it wasn't aligned to your plan, and you were so afraid that you were going to miss out on an opportunity that you took that opportunity anyhow instead. All of that is from subconscious conditioning. Consciously, you want to follow your plan. You want to do the things that you said that you were going to do, because you know if you do them consistently, chances are positive things are going to happen. But if you can't take that action that you intended to take because subconscious conditioning and processes take the action before you're able to, you're not going to be able to move into your intention. And now you feel like you've made a mistake, like you did something wrong, like you failed. And when you start feeling that way, what happens? You create that sense of failure. Why? Because you take action from those emotions. And so what do we try to do? We try to heal those emotions, fix those emotions, change those emotions. But what we're finding in neuroplasticity and neuroscience and other science is all of those patterns, none of them ever go away. They can weaken, but they never go away. This is why I've studied a lot of addicts and addiction. Not because I'm an addict, but because I've always wondered this. My father was in and out of rehab and addiction throughout his whole life, okay? And he had friends that would have 20, 30 years of sobriety, and they would turn around and relapse after 20 to 30 years. Well, if you spent 20 to 30 years of your life building new habits, you would think that would be enough for the old habits to come offline. But they don't, because something in your environment can trigger something, and the moment it does, all of those old patterns come back online again. Conscious intention goes offline, and they take action before conscious intention has a chance to influence action. Because subconscious processes, the central nervous system works faster than conscious thought is able to. And so when it comes to trading, it comes to life, if you can understand that process, you can utilize it to completely reshape the reality that you're currently living, your whole life. Okay? And so what I'm going to do is I'm going to go through right now a process that's called the return, hence Live the Return TV. Let me get rid of all of these things on my chart and see if we're starting to trade here into an area, but it's too early for me to take trades, so I'm not really paying attention to this right now. It's not time for me to pay attention to it. So what is the return? Well, as I told you earlier, the return is a practice that allows you to physically connect to the present moment. So what does that mean? Well, when you think about your body, here I am right now, my body, right? I'm sitting in this chair. There's a desk in front of me. There's monitors in front of me. There's stuff behind me. Matter. But between matter, what is there? There's air, there's space. And what is that space and air? It's unoccupied space. And our body maps this space. It knows what's around it. How do we know? Well, have you ever had that creepy feeling of somebody watching you? Or that there's danger, right? If you go back to the caveman times, right? I love this analogy. I heard it a long time ago. I don't even remember who I heard it from, but I love this analogy. The saber-toothed tiger, right? Here, you're in a grassy area, right? And you're hunting. And all of a sudden, you just get this sense and feeling that something's watching you. And so you move to defend yourself, fight or flight, right? The reptilian brain, Villa Amagata, whatever it is that you want to call it, okay, kicks in. Well, what caused it to kick in the first place? You didn't sense it through your five senses. What is it that it made you think that there was danger around you, even though you can't sense it through your primary senses? Because the body maps the space that's around you. That's what's going on. The body maps it. Science has proven this. So what I do is I take that idea and I say, okay, if the body's already mapped it, the body feel it. So what I do is I put my hands about 6 inches apart in front of me, and I just focus on the space between my hands. Now, I've been doing this for a while, and so it's very easy for me to feel that initial sensation, and it's like a tingling. I can feel it tingling in my fingertips. I can feel it tingling in my palms. I can move my hands. I can rotate them, right? And in that rotation, I can feel more of that tingling. Why? Because it's energy, because it's heat transferring from my hands, and that's what I'm feeling. My body has already mapped the space around it, and I'm just focusing on the feeling that the body, I'm only focusing my mind on the feeling the body has already created. That's all I'm doing. And so in this moment, I'm focusing on the space between my hands, and my body is responding to the felt experience of the mapping it's already done. The body's feeling that. I'm just bringing the intention or the feeling of that sensation to my conscious mind because I'm consciously focusing on that space. That's it. That's all I'm doing. And I can feel it, push my hands away. I can feel it, bring my hands together and push away and come together. And I'm not breathing. I'm not meditating. I'm just allowing my conscious mind to feel the sensation that the body has already created for itself by mapping the space that's around it. And I've done this too, where I've put a piece of mass in front of me or between my hands. Like I can do it where my hands are actually around my desk and I can still feel that same sensation. So I focus on that sensation. I focus on it, and I let it go. And then, because I practiced it for a while, I recall the sensation in my mind. And when I do, the body responds. And now the body and the mind are anchored together. But not the subconscious mind of the central nervous system, conscious mind and the physical body, anchored as one in the space around me. And what is this space? Air. It's untouched. It exists everywhere, all over the place, all the time. What is that existence? That existence is now. The air doesn't exist yesterday, doesn't exist tomorrow. It's always here. How do I know? Because I breathe it in and it gives me life. And if it was never ever there at some point, I would suffocate. Because it's not giving me the life mana through oxygen and the other chemicals in the air for me to be able to breathe and sustain life. And I don't breathe a few seconds ago. I don't breathe a few moments from now. I breathe right now in the present moment. Body responses, the body mapping, the mind anchoring with the body, the conscious mind anchoring with the body, anchors us into the present moment, into now. And in that anchoring, we separate from the subconscious processes. And now we're free to focus on intention and take action. Until we get triggered. And then when we're triggered, we're going to take action to whatever subconscious processes were triggered. And this is why we go back to the return. And so I'm going to demonstrate this at the live edge of the markets. Why? Because the return has changed my life. I would go through periods of time where I had a hard time trading, market conditions shifted, whatever it might be. I'm in my head, in my thoughts. And it changes the way I even create my plans. Changes everything. Perception is created from one of two things. It's either created one through subconscious processes that are linked through the subconscious mind and the central nervous system, or the conscious mind. These are the only two things that can create perception. We don't create perception through our conscious mind, through our conscious intention. Most of our perception triggers subconscious processes. And again, if subconscious processes are not aligned to conscious intention, we're not going to get to our desired destination because subconscious processes have taken over. The return is about going into an anchoring, going into a mental process to focus on what the body already knows and anchoring the mind and body together so it can move together into intention. And that whole process separates us from the subconscious conditioning, which allows us to change the way we do things. And I'm going to, again, demonstrate that live here at the live edge of the markets. And that's what this whole setup is designed for. So, enough theory, enough talking. Let's get into the markets and see what the heck is going on. Let's get into our shorter time frame charts and look at this. Price action on the 30-minute has moved into our area, which is right down here. Off that area that we created around the 29,000 mark is right down here in this area. And it rejected. From this area right here. And if we try to go back, how far we can go back, this test and I know how far we can go back. I just don't know how far the chart will let me go. Can't index the actual low, which is fine. I don't need to. And price action is now trading out of the area. Okay. Now this area now is in a value within the value area of the higher time frame. And so I'm not interested in that area anymore. 29,600. I can get rid of this. This is an old area, and this is an old area. So what would I be looking for a potential trade set up? This is where anticipation comes in. I already have my trading plan. I already know what's going on. I'm anticipating price action to come down in 29,080, 29,040, 29,000 and test. Now, that's a pretty big range. So let's see if we can make that range just a little bit easier to define. And that's what we're going to go into this chart for. This is the order flow section. So here's our lows, right? Price action tested back into this area on this bar of low volume and rejected. Look, price action made the low, right? Higher volume here. And it wasn't able to make any lower lows. We get higher volume here, but look, did price action spend a lot of time down here in this low? Or did price action break out of here pretty quickly? It broke out of here pretty quickly because we don't have a lot of volume. It traded around here, short-term support, short-term resistance, broke out of there quickly. Do what? Create another range of support and resistance through here. What did price action do? Tested the low volume of this and made higher highs. And look, all the volume printing at the highs. And we broke out of it nicely. We didn't even come back to test these areas down in here at all. We just continued to make higher highs. Then we came in after these higher highs and we tested this area of low volume and made higher highs again. Then we tested the low volume again, and made higher highs. And then we made an equal high, price action now here, right? All of this volume down here, support, resistance, short-term support, resistance. What happened on the next bar? Price action tested the support and came up and made higher highs. So what can we anticipate that this market could possibly do at this point in time? We can say that untested low volume nodes exist in this area in here and exist down here. If I want to run, let's say, a 20-point stop in the market, I need to be entered by 32 down here. I need to pull back into this area to get me long to hold a 20-point stop in this current market condition. So I'm anticipating a pullback now into this area so I can manage the risk of the position if I'm wrong. Will it get down here? Who knows? Based upon current price action, probably not. But we don't know. But that's my area of entry. And in my plan and my risk management, I do not want to be in at higher prices above this range. So does that mean when it touches, I want to buy it No, definitely not. I want to really see it come in through here and reject. And then it's probably going to test in through here again, and then it's going to go. Or break through, even better, break through the low. Why do I want it to break through the low? Go hunt stops. Threaten me with a good time. I want to go long. There's sell stops down here, possibly. That's buying orders, right? I can turn around now and go with the momentum of the stop orders being hit. I don't have to guess. I know where my entry point is. I know why I'm entering around that point. And now I just have to wait for price action, get there, and to either enter with me or allow me to enter into the position or to go without me. Because I'm anticipating price action, come back and test value area high of our longer time frame chart, which is up here. Sorry, bear with me. I'm still figuring out how to do this all live at 507 and a quarter. 507 and a quarter. Okay. That's where I'm anticipating price action to go. And so think about it. If I can get into a position, possibly, all the way down here, let's say even at 40, 44, 29,044, and I'm anticipating price action to get to 511. 511. That's 500 points. 500 points. Am I planning on it doing that whole thing in the Asian session? No. Where are my other targets at? Down here at 260, up here at 29 and a quarter. Let's say you're risking 20 points on per contract, 40 points total, and your first target's 50 points and your next target's 100. It's 150 points, risking 40. Well, that's almost a 4-to-1 risk-reward ratio. That's in my wheelhouse. I'll take that all day long. That's why I trade auction market theory. I know what market condition I'm in. I know what I need to see or what's going to happen to create a market shift to change current market conditions. I know how to change my plan around those conditions, and I have areas for me to enter where I know I can enter around them. And if I'm wrong, I know where I'm wrong and I can set my stop to those areas. And if everything lines up perfectly, I'm in with a nearly 4-to-1 or higher risk reward ratio. Proper money management, I'm not. If I don't get in, just to get in, which sometimes, I can create plans to do that. I'm not going to get into that right now, but there are ways of getting in case a market is moving in your direction. And you want to switch and start trading an imbalanced market condition comparatively to the range that you're in. That is absolutely possible to do. But I have to be able to see momentum coming into the markets in order to be able to do those things. So the point of this is market can't do anything that I'm not already anticipating. And if the market can't do something if the market starts to do something that I can't anticipate, I sit in my hands and I don't trade because I'm going to be trading in the context of doubt at that point. And if I start trading in doubt, I'm going to start trading in fear, and that's going to trigger the central nervous system, signal to the subconscious mind, the subconscious conditioning take over, and now I'm not going to be trading my plan anymore. Trading psychology is not about trying to control yourself. Psychology of life of getting to you to live the life that you want to live is not about trying to control what you're doing or what other people are doing. It is about learning how to be confident in your decision-making processes and what you're doing. Where does that confidence comes from? Trust. Trust in what? Trust in your methodology. Trust in yourself. Why do we feel so bad living our life? Because very few of us have the confidence and conviction that comes from self-trust. Sorry, family stuff. Family stuff comes up, and sometimes you just gotta handle it as other things are going on. And so look, price action is coming back down again. Is it going to come into my area? I don't know. I have no idea. All I know is that I know what I'm going to do. I'm not going to take action until it does. Also, okay, TikTok, YouTube Shorts, because I'm multi-streaming here. I need to apologize to all of you that aren't on the Twitch app. You're only going to see a portion of the charts, okay? You're not going to be able to see everything that I am talking about, unfortunately, because there's no way of getting the charts to be able to show up properly on a vertical screen, okay? If you want to see the full screen, if you want to see order flow analysis, come over to the Purple app. And the Purple app, you're going to be able to, or even YouTube too, you're going to be able to see the full wide screen and get the whole immersion, okay? Because there's going to be times where I'm going to actually just go into order flow. And I think now is a great time to do it. We got an area underneath us. Let's see what order flow is currently doing. Right now, if we take order flow, we're starting to trade in this range, and we're starting to create some pretty good support here around the 72 area. Okay. Every time we try to make a lower low, so far, buyers have stepped in. We just created a lower low for the first time on 5 contracts. 5 contracts lower low. Well, that's not a lot of size comparatively to the last time we made the low or the previous low. And so we're making lows now on lower volume. What does that mean? That means that sellers are currently in control of the market because we're making lower lows on lower volume. Now the volume's starting to come in a little bit at the 60s, but volume is we're seeing less and less volume creating lows, which means that there's not support, buying support underneath us. Right now, order flow is telling us that sellers are in control. That's it. Sellers are in control, and we are getting really close to our area. Sellers are really in control, went right through our area. This is why I'm not buying this right now, because we don't see any form of rejection. Let's see what happens here at the lows of 12. Boom. Price action still going lower really fast, really hard. Price action is not being supported by buyers right now. So what's going to happen? If price action starts getting buyers, we're going to go back up through the 32, 36 area. Notice I didn't get in at the 36, 32 area. I did not get in here. I was watching price action. Here's the lower low on lower volume. This is where I noticed sellers coming in and getting momentum, proven here, then traded right through my area. And I'm not chasing it. And I didn't just try to buy to get into the market because it's not doing what I would anticipate it to do if I wanted to buy the market. It's all about anticipation, because if you have a plan, now you have areas and you can anticipate what price action's going to do next. I anticipated sellers were in control of the market and there was no buyers in there before it even came to my area. Then it comes into my area and I'm like, okay, there's no buyers here. There's only sellers. I want to go long from this area. I'm not buying where sellers are strong. It's that simple. Trading is not difficult. But what's happening now? We're seeing some buying pressure off of these lows in here, and this is a great area for me to be looking at potential longs. So what does that mean? That, oh, now I see buyers stepping into the market, I just want to go long? No, because we need to see on a shorter time frame higher highs, higher lows. And we're not developing that right now. We're still creating lower lows or lower highs. And we got some buyers stepping in here. We've got resistance, short-term resistance and support right here, right? We haven't made higher highs at all. None, not a single one. Now we have higher highs on what? Much lower volume. Look, last time when we just had this huge down move, look at all the sellers in here. Now look, we have very few sellers or buyers in here, and we're making higher highs. Okay, but then what happens? Price action rejects from those highs, higher volume, lower. We don't know if these are buyers or sellers yet. Short-term resistance, short-term support. Now let's see what price action does. If buyers are strong, they're going to come in and test this area of high volume around the 78s, and we're going to move up into the 90s and break higher highs. If this market is weak, we're going to come up here. We're going to test this high. We're going to test this higher volume range right in here, and we're going to reject and come back and trade through here. And if we're really weak, we're going to trade through here and create lower lows. So let's see what happens. Right now, we're just trading in the area of balance in this short time frame, rejected the resistance area, which was the old support area, which is now resistance. Sellers are getting strong down in here. Higher volume, we should be anticipating price action to break the lows from this higher volume. They're not. They're lifting the offer. Buyers are now in control with this area here in support. Does that mean I want to just go in and buy this? No, we don't have a higher high, higher low structure. You don't want to just go in and buy because you're seeing order flow of buyers stepping in. You want to be able to anticipate what's happening. Anticipation is seeing higher highs, higher lows. I'm not seeing it yet. I'm seeing price action holding this area of support. I see support here as a purpose and reason for it to be there. Let's see how price reacts around these areas. Let price tell you what it's doing based upon your planning and analysis. I'm anticipating this low to break. Why am I anticipating this low to break? Because we're gaining volume here and we're not seeing them lift the offer. And there's lower lows. Lower lows, I'm anticipating this price action to break down into this low and lower. I'm anticipating us to possibly come down into the 28,800 right now. Why? Because we're not seeing buyers stepping into this market. Sellers are in command at the moment. And price action or order flow is telling us that. This is the power of order flow. Oh, did I want to just short there off of momentum? No. Why? Not part of my trading plan. And you? 100%. Can I teach you how to do that? Sure, I just did. Why am I not in that? Because it's not part of my plan. Remember, I was a buyer down here, not a seller. Because we're trading in value and we're going counter trend to the imbalanced market condition to higher from the longer time frame charts. If I'm going to go short, I want conviction. I'm not a scalper. I'm not looking for scalping positions. I'm looking to be in at 28,000 and take this market up to, 29,000? Sorry, I'm looking at being in at around 29,000 and taking this market all the way up to 29,500. That's what I'm looking at doing all in one day. And it happens all the time. I can't wait for one of these times for it to actually happen. So what's happening now? We created a lower low. We took out the lows here. We absolutely took out this low. What does that mean? We probably shop for stops. And if this market's strong, we're going to break higher highs. We're going to make higher lows. We're going to break this area. We're going to come back and retest this area again. And now I'm long. Wait and see what happens. We're printing a lot of volume up here in these highs. We're not breaking the highs, so what are we probably going to do? We're going to test back into where the low volume is. Where's your low volume? Right in here. We'll already tested back into that. Where's your next low volume? Down in this area. This is where I would love the market to come down and test right now. Get through this area of support, the rejection in this area, and pop up and break this high. That's telling me buyers are in. And then now we're supporting this area down here. We may not get down here. We might reject here, which would be the same thing, but I would love for price action to come down here. Like, I love it. But it's not. It came down here into this low volume, which is the same thing. We haven't made the higher high. And so what are we probably going to do? If we get below this area of volume in here, we're going to make lower lows. We're going to trade around this just a little bit, and then we're probably going to come down here. Let's see what happens. See? Anticipation. I'm not saying what the market's going to do. I'm just saying my hypothesis of my interpretation of what I think it could do in this area. There's your lower low. Comes in, tests your high volume. Now I'm anticipating a test in here. And if it doesn't hold here, we're probably going to go down and break the lows. Now this area is now a resistance area instead of support. What's happening? Look at all this volume printing at the low. And we couldn't go lower and we're testing the highs? That's not sellers down here, that's buyers. Just because it's green and red, we don't know if it's buyers or sellers. We don't know. But all this volume printing, all of this volume printing in here, okay? That's not sellers in the market. How do I know? Because we broke the lower lows in this high volume. We should be trading lower. Now, we're not saying that there's buyers up here because we haven't broke out of the highs. But this is definitely not selling pressure. Now we have resistance, we have support, we have a little bit more resistance in here. Now let's see what happens. Do we break these highs and get back into the area? Or do we come down and test into this area? Do we test these lows here and possibly see buyers step out and sellers get aggressive? Don't know. I have no idea what the market's going to do. I'm just reading what it's telling me right now. Hold this area of support. Hold it. Let's see if we make higher highs. The market's strong. Buyers are going to come in here and push through these highs. It's inevitable if the market's strong. There's your highs, your higher volume right here. Come back in, test a little bit more before we really get excited and aggressive. Maybe even test down in here, down into here possibly to see if buyers respond at lower prices. Nope. We're going to print more volume in here and we're probably going to break these highs now. Now notice I'm not acting on my anticipation. I'm speaking through my anticipation. Letting price confirm what it's doing around my analysis. Here's your low volume. This is where I wanted to see it test. Look at all of the volume come into this area and we couldn't break a lower low. So let's really see if this is buyers. If it's buyers, what should we see right now? We should start seeing price action moving into higher highs. This is not a bad area to buy in for an exploratory position based upon this high volume. Not doing it because it's not part of my plan. Again, high volume can't even break the lows. We're not seeing the higher highs yet. Price action has not proven to us that buyers are in control. It's showing us that buyers have the potential of being in control. Lower prices, higher volume, testing it multiple times without breaking highs, I'm now anticipating lows to be broken. And I still haven't entered. No entries. Just waiting. Waiting for price action. Oh, look. We're moving higher. I would have never guessed that we'd be moving higher from those areas. I just don't understand. What could be going on in the market right now? And that's what's going on in most of our heads as we're trading. What is the market doing? What's going on? Should I be entering here? Should I not be entering here? What's happening? Not once has the market done anything tonight. Maybe you go, wow, I wonder why it did that. And there's your highs. On the higher volume, just above the highs. You see more pressure than that for buyers to really be stepping in. And so we're here now in this little area of contention. Is this going to be resistance? So we're going to see resistance break and become support, move us back into an upward condition. There's a support. Price action can break through here, come back, pull back into this area, pull back into this area, and that's where I would be looking at being a buyer. I'm still not buying this right now because price action is holding this area as resistance right now and not as support. Remember why I put this line in the first place? Because I was anticipating this area to be tested. And look, even on a 1 minute time frame, price action is trading around my areas. Not indicators, areas. Areas of where I'm anticipating price action to be making a market shift. Right now, it's trading lower or in unfair lows. I'm anticipating buyers to support this market and move us back up into higher areas of value. My plan. Price action hasn't proven to me yet with order flow that it's ready to do that. And I'm sitting on my hands, waiting. Do we have any other areas of support below us that could be possibly tested? Maybe a little bit in here. Let's look at these lows down in here. It's nothing but low volume in here. Maybe the 68 to 74 area. Let's see what happens if price action comes down that far. Short-term resistance, short-term support. Is that 3 contracts there? Is that what that is? That's so hard to see. It's because of this market. Yeah, it's 3, and then we had 7. So see, 3, 7, tested the low, 1111, right? Through here, and only 3 sellers in here, and we couldn't break the low. And now look, we're back up here into this area, testing it again. We're probably going to break it this time. So there's your printing of volume. Possibly coming back and maybe testing into this area after we break up here. And that's going to give me the trigger to my long position. It hasn't happened yet. And if we break out of here, we might just go. It might just go without me. And fine. I don't care. Go without me. I'm not getting in until I see what it is that I want to see for my entry. $23 right there is resistance. what I mean by 23 right there. We have resistance above us. Okay, this area was once support. We traded through it. Now it's resistance. There it is. Chased it a little bit there. I did chase it a little bit there on my entry, but there's that entry into that position. So let's get rid of this chart. And now wait and see what it does. Should have waited for that pullback right here and bought in around the 28. That was a little bit of an early entry for me. So 40. We're stopped out here at 29. So we're going to try another entry here for a buy if we get back up through that area. Price actions holding this area of support, traded right into the resistance. Came into the low volume, which I like to see. Printing volume a little bit at the higher prices. See what happens when we test this low. Unable to break it with any form of conviction. If this market's strong, we're going to pull up and we're going to break through this 22 area. Market's weak, we're going to test the 22, come back down here and test to make the lows. And what is going on here? There's something wrong with my dome. It's getting me out at 5 tick stops. Well, this is new. Oh, I see why. Okay. You know what I need to do? I need to remove all of these. What is price action doing right now? 14.25. Where's my entry? 29. Still in this. Still be in it. Should still be in this. I need to adjust my stuff on my dome. See, this is why when you come in, especially in the new environment, right? I'm live. My dome isn't set up properly. This is why you practice all of this before you start going in to a live condition. This pretty closely here. You have the support and resistance. You need to get back up above that level. Buyers here. There we go. There's the break of the high. Now let's see if we can get into higher prices. Where did this go down to? what level? Here's your lows. Here's your low volume right there. Yeah. This still feels like it wants to go up. All right, so if I was in this, which I should be, right? If I was in this, that's minimize that. So if I was in this, I would be looking at it. Do I want to get out? Target. Yeah, I entered way too long there. And this is a mistake that I actually made here. When we went through here and I was waiting on this bar, okay, I got too focused into price action. And when I got too focused into price action, what I didn't do is I didn't re-index my area. And so if I'm looking at this bar, which is this low right here through the 63, what I should have done is re-indexed my area. And an indexing of my area for low volume node rejections, you're looking at this area right in here. And you're looking at this area right in here. And now you're looking for price action to make higher highs and pull back into these areas for potential entries. 97, 62. I would want a lower area than that. Pull me back into here. Yeah. Go here. See here, where's this low at? $37.25. 37. Can't be. Yes. Okay. So there's the low. This is what I should have been indexing here. And then your low volume for your test is right down here. And now a test into this area instead of the 40s that I was looking at. So I did make a couple of judgment errors. I was talking too much and got too fixated on this point of contention right here. And you had my parts over here of my order flow where I can't see everything because this market's just so wide, right? This. Now I can see the low. There's your low volume, your entries right here into this area. And you want to be in 53. And so price hasn't even pulled back that far yet. You really want to be in this area in here. So if I look in the 50s to 53 range, what do I see? Anything on these lows? And I don't see a thing. This drop happened on way too low volume. I don't have anything to reflect there for potential pullbacks. No order flow right there can give me any form of confirmation for what I should be looking for in terms of a pullback. It's just not there. And so let's see what happens here. Let's see what happens. But I do need to fix my targets and stuff real quick because those were completely wrong. So 4 ticks, 20 would be 80. Let's do 400 on the first. And so that would actually be target 1. So really I want 40 at 20. We're going to do 80. And then the second one is going to be 400. And then the stop is going to be one is going to be a limit. Target limit. Target limit. And then but only one. And only one. Okay. And then now we're going to add 20 and 80. 20 point stop. All right. Now what I want to do is I am just going to area here. We got buyers, low volume right there. Go ahead and there we go. And so now if I'm long, right, go ahead and move that stop where it's supposed to be. You're in here. First target is going to be up in here somewhere. I got to get rid of the confirmations too. I had all of this set up. I don't know why it's such a mess. Anyways, work for me to do tomorrow. Now, if I go back into my LTFs, I'm looking at price action, getting back into $349 and this volume area low at 0.9088. Okay, so I'm looking at price action coming back into the 0.88 area. Entry here at 17. It's not a bad first target. So drop the first target into the 88s. Yeah, that's fine. And then the next target we're looking at is 317, which is way up there. 317, and we're looking at the 499. So we could actually go here at the 499s. Now I'm just curious. I want to look at the daily real quick. We've already gone 200 points. We can easily go another 200. Price action is failing up here. Good. Yeah, price action is failing up here a little bit. We're still hitting support. We are not breaking the higher highs. The down sideways. This is looking like it is a heck of a lot more bearish on this time frame than bullish at the moment. What's going to switch that idea? Price action comes in and breaks these highs up here. We haven't made lower lows yet. This is looking a bit more bearish at the moment comparatively to bullish. And if we want, extend this out. And it's not going to let me. Yeah. This. Close there. Okay, so I might close indexed right there. All the way over. Oh yeah, there we go. That's a pretty good perspective actually. we could be looking at that first target here. And then the second target here. There we go. Now we broke through the low of this structure. So if we go back to the trading plan, I wanted to look long around the 28,400s and the that price right there. Can't even tell. $28s. We got into the 28,940. $28,940. 28.9. Yeah. Wait. This is the area that I was looking at buying, was the 28.9 area. Anyhow, we got to the 28,940. Yeah. And so now you're in the market, you're in a trade. Matter of waiting to see what it does. When this happened through here, I didn't go back and re-index the low. I tried to maintain an entry around this low here instead of re-indexing the other low. And that was a complete oversight on my side. And that needs to go into my journal. And so what is price action telling me here? Price action is telling me that we're rejecting higher highs right now. And it's really feeling like this market wants to go down. I don't even like being long right now. To be honest with you. Because I don't like how it's doing what it's doing at the moment. Let's see what happens around here, these lows. Yeah. Dropping a higher volume. Do we get through the resistance, or do we just continue to break lows? We're not lifting the offer higher. Maintaining the lower range. Tried to get back up there and immediately sold off. Sellers hit aggressively there. And then buyers hit aggressively as soon as they retested. Order flow right now is telling us that both buyers and sellers are in here. This right here would be the pullback. I got in again up here because I was testing my dome. But that would be an area that I would still be looking for a potential long, especially after creating the higher highs in there and looking for a push to the upside. I don't see anything telling me that I shouldn't be looking long. I just don't like price action doing what it's doing right now that I am long, if that makes any sense. And so there's something to that, right? If you don't like what price action is doing, you can always get out of the market. But where is my area of being wrong? I'm not wrong until this low breaks. This is the market shift, but I don't like this wide bar of momentum coming in against my direction. This is a momentum bar to the downside. If we close down here, chances are a high probability that this low is going to break. Okay. But what I'm waiting for is to see what price action is going to do on the close. Close in the bottom 1/3. Anticipate a pullback into a low volume up here, which would be right around this area, possibly right up in here. Testing back into what was once support. Now it's resistance. Failure of that, moving back down into the lows, breaking lower lows. That's if this market's weak. The market is strong. Price action is going to come in here, take out these highs, take out the high of this little area of resistance, and break higher highs. Price action is not telling us by any stretch of the imagination that that's what it wants to do. We're holding resistance right now. Sellers are in control of this market at this point in time. And being long when sellers are in control is not an easy thing to do. You know where you're wrong, you own the risk, and now you just wait for price action to do what it's going to do. But see, the other thing that this is doing too is it's giving us all of the ability to enter somewhere, allowing these lows be our stop with a 20 point stop, right? 36, 56. So 56 is right here. That's what it's doing, is it's giving us the ability to do that. And down here, the lower lows, all of this rejection, we tested this low and couldn't get lower. Couldn't get lower here. So one of two things are going to happen. We're going to reject off of here, break this low, and then start breaking these lows. And this is going to happen. If we break this low, we're going to break these lows pretty quickly, more than likely, because the momentum is going to kick in. If this market's strong, we're going to hold this area as support here, see rejection, buyers step back in to break the highs. I'm just not seeing buyers stepping in here off the lows anywhere. And so if I was still in this position, or if I was not in this position, right, which this last position for me was a test, make sure that I could get my my dome working properly. If I wasn't in this position, I would be looking at a potential entry in this area, just not yet. I want to see what happens if we test these lows. We haven't quite tested them yet. Now we're testing them, broke them a little bit. Load. And I'm anticipating this to break with some volatility here. Come back up here, test 2960s, and expecting this to break down. Tested the 59.25. Tested the lows. Now see, making the lower lows. And that's, yeah, this is going to continue lower at this point. So if I was still looking at this area for an entry, now I'd want to see a higher high back into this area and then along. And so now there's an area down here. This is what I wanted to see. There is an area down here now that gives us an entry point where we could have a 20-point stop off of the low if we're just patient. That's right here. Developing, so I'm going to wait till it's done developing. Wait for the bar to close. That's the area for the potential entry right there on a pullback. And then you have a 10 point or 20-point stop with this area down here as your low. I just tried to get in early. Just a little early. Not wrong. Just early. Pull back into here. Pull back into here. Higher high. Pull back into these areas. But buyers are definitely defending the lows. And there it is. Now it's just time to wait, see what price action decides to do. Store that. And there's the test. There's your buyers coming off of it. That was your entry. And so I would be looking at taking a long entry off of that little setup right there that just happened. And the first target would be up here at the 29, where is it? 29 180s. Is that where the first target is? Yeah. 29 180s. 29 180s from a 28 961, 28 958 entry right around in there. And then, of course, if you waited, what happens? Now we're seeing some momentum to the upside right after the actual entry. When you pinpoint entries properly, utilizing auction market theory, this is what usually happens. Momentum comes in right after the optimal entry. Now, I didn't do an optimal entry tonight. I had an issue with my dome on a couple of the trades that I tried to enter, and I entered way too high because I was focusing on this chart right here, which doesn't give me the ability to see price. And I was trying to do that for the TikTok viewers for my 9 by 16 view, and I'm not going to do that next time. So yes, if anybody ever wants to see order flow and what I'm doing in order flow and how I'm reading it, you got to go to the Purple app or YouTube. Either one. Now we have momentum coming back here into the market. Let's see if that momentum continues. Definitely closed above the upper area. Moving away from that pretty quickly. This was the other area. Yes. This is why patience and waiting for the pullback is so important in short-term trading. You gotta wait. You have to wait. Give it time. It's so much better. Give it more time than try to get in too fast. So this was the area up here, which makes a lot of sense, right? You got your low volume here. This could be the rejection to actually have price action go lower. And that is from this perspective right here. So there's two things that I need to do before I can actually start taking trades in a live account. One, I need to get my dome working properly. Two, and this one's actually extremely important, I need my lines on my 2-minute chart to be aligned to what I drew in my trading plan. When I look at my trading plan, right, these are my areas. I need to make sure that these areas are reflected directly on my 2-minute chart, my entry chart. And with as wide as this market is right now, wonder. The Asian session. I haven't traded the NASDAQ in the Asian session. Oh, yeah. This is going down. Closed above the low. We came back. We closed back down again. 100% retracement of this. We do have a gap here. We do have a strong gap here that's not closed. And so we could move up into the 120s and possibly close this gap. But on this 15-minute chart, this is not looking like a bullish setup at all. This is looking extremely bearish. Extremely bearish. Well, the good thing is we're definitely sitting at an inflection point, right? And what does that mean? Sitting at a point where the market is having to make a decision down here, right? We're at the edge. We're right at the live edge of what this market's going to do. Either buyers are going to step in down here and move price up, or sellers are going to break through and move price down. That's the whole key to this style of trading with auction market theory, right? Why you want to wait to pinpoint your entries so you're in there where you know you're wrong. And this low, if price action breaks the low, you know you're wrong. But the 15-minute chart looks really bearish right now. An uptrend in value on the daily chart with a low of 28,940. 28,940. 28,940. Oh yeah. Right there into that low volume. Right there into that low volume. Reject. Move us back into 29,081 and a quarter. Or come in, break this low, and test into here. See what happens. Time will tell. So this high is important here. Could see some rejection here at the 2940s or 29,040. And we could see some rejection in here around the 80s and the 60s as well. But if we get through these two areas, chances are we're going to pull price back into the 172.25. Now we're right back into my old area here of resistance, and we're currently trading through it as that area as resistance. And so anticipating a possible test down here to the 18s, possibly come back here into the 06, 05. Looking at the FIG down here at 00, be a pullback viability, move price action above the 36, 37 range. But we really want to see price close above the 36, 37 here. And then a pullback, if this market does start making lower lows, a pullback into the 29,000 even to FIG, right? And then find support from that area and then start breaking into these highs and making higher highs and closing above the 36 area. So this is where trading gets to be a lot of fun. You know, it's just it's the boredom, you know, it's waiting to see what price is going to do. That's all it is. Waiting to see what price is going to do and then reacting to it. Pace, plan, sorry. Okay. Pace, P, plan, right? And then we're going to anticipate. And then we're going to confirm the signal itself. And then we're going to execute. Pace. You just got to pace yourself. And so there's your price action above the 37.38, but we really need to see a close above here because this area has been resistance for us all night. We want to see a nice close above this. A nice close is near the high, top 1/3 of the bar itself. We want to see buyers, you know, stay aggressive in all time frames at the high of this bar. Yeah, and see, and that's not what we wanted to see, right? We finally got the bar to come through that nicely, and then we're already trading back below it again, right? That's not what we want to see on that same bar. We would want to see it close up here, the next couple of bars pull back into this area. We didn't see that. And now let's see what happens. Lower low, higher volume, 326. There's your 53 right there. There's your area of support, and immediately came down and sold through this. Testing Is this now going to be continued resistance? We're going to get back through it again for potential support. All I know is this. I'm not risking anything else on this position. Stop to a break even. Because if we break through this low here, we could pull back into the big, into somewhere around the 72, 75. But if this market's strong, we should get through this area, close above it, and hold it as support. We're just not doing it yet. But if the markets at these highs aren't doing what I anticipate it to do, then I want to take the risk off the position. You know, if you think about the futures markets and, you know, currencies, anything along those lines, when you buy a contract in something, what do you actually own? I mean, do you own, like, let's say, for example, you're trading the ES, okay? Every ES contract is $50,000 worth of stock in the S&P 500 is really what you're trading, okay? Oh, I see what happened. Yes, yes, yes. No, 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 no. Target 1 is 1. Target 2 is 1. Stop is 2. But why is... Why is that happening? Sorry, I'm still trying to get my dome set up properly. This is really starting to irritate me. I'm using Sierra charts because it gives me the chance to use auction market theory the way that I like to use it. And it's one of the best platforms for what it, you know, creating volume profiles on current price action, right? It's great for that, but everything else is pretty finicky with it. And so due to, I want this to be my stop, and I want that to be 20 points at 4 ticks. You're looking at 80 ticks. That looks good. Now we're going to add, and I want this to be 1, and I want a target limit. And my first limit, I want to be at 80 ticks as well. And then I want to add, wait. I'll need to work on this when I get off stream. This is not working well. Okay, so as I was saying, Sierra charts, I use it for my being able to create the volume profiles and stuff that I create off of intraday session. Okay, not every platform is able to do that. And I really need those areas for my style of trading. But the problem with Sierra charts is it can be it can be a bit difficult to manage. And I want a second target. And then my stop at 2. No. It's been so long since I have taken a trade on this platform as well. Ugh. So price action failed to break out to the upside, right? Now we're rejecting to lower prices. Sellers seem to be in control of this market at the moment. Not buyers. So all I'm just trying to get my dome set up, guys. I'm sorry. Technical difficulties on my first night of streaming. Go figure. Just want to just check this out. I want to put this down here. Move these way up. And I just want to see. I wanted to move that into a break even. There we go. So now if that stop gets hit, does it take me out with 2 or just 1? That's the question. I always trade 2 contracts. That way I always have a runner, right? Always have a runner. I can get out at 20 points, a 1-to-1 risk reward ratio, and then start to trail my stop as the market is going with me, looking for my higher targets. Or I could just leave my stop at a break even, just let it run, depending on what's happening with the market and momentum and those type of things. Now I wanted to take my risk off. Should have been down here. Should have been in this area down at here, not up here. Getting in down in here, plenty of room for potential profits. You could be scaling down through these lows in here for a trailing stop. Taking risk out of the position as you're going with it. But going back into the idea of what I was talking about earlier, when we look at the stock market, okay, a stock, when you buy a stock, you're buying ownership of the company, okay? When you are in the futures markets, you're not buying ownership of anything. You own a contract, okay? It's a derivative, not an equity, it's a derivative. And so you own a contract of 50,000 stocks, or, in the S&P 500, for example, for the ES. Well, what you own is risk of the position going against you, okay? And so as a trader in the futures markets, Bitcoin, any of that, okay, good. I got it working. What's happening is you don't own an asset, you own risk. The moment you enter a market, you own risk. And so what you want to do is get really good at managing your risk. And if you can get really good at managing your risk, everything else starts taking over for you. And I just want to test this one more time. Want it to come out and take me out again. There we go. Yep. Okay, good. It's working. Utamas. Those two positions I just entered, those aren't positions that I'm actually entering. Those are just testing the dome, trying to get the targets and everything working properly, because it was not working before. All OCO groups, group 2, group 1. That's what I was doing. Okay, I figured it out. Now I can duplicate it later on. But as I was talking about earlier too, right? Price action is not accepting at higher prices. If price action is not accepting at higher prices, what's going to happen? If you continue to test higher prices and buyers are rejecting those higher prices, in other words, they're stepping out of the market, then price action is going to start to test lows. And that's exactly what we're seeing here. Price action is absolutely 100% testing lows. And so we can absolutely see 28,800 this evening or sometime tomorrow in the New York session. Possibly in the London session. Because we're not accepting, buyers are not accepting higher prices. Buyers are rejecting higher prices. Yes, and having my candlestick chart of price. The left-hand side is going to be instrumental for this. Excuse me, sorry about that. I need a chart, so I am not going to be doing that again. Bringing the footprint chart over. All right. So, markets aren't really doing anything. Let's get back into some order flow and see what's happening in order flow. Price action is currently trading at the previous bar high. We are getting contracts in here and barely broke the high. We have support around the 66. Let's see what happens when price action tests the 66. If buyers are strong, market's strong, buyers are going to come in and defend the 66 and immediately push us back up above the 76, 78. Okay. If buyers are strong after being pushed up, they're going to break the highs of 84. Okay. And break the highs of 84 with some volume. We're not seeing that. We're seeing now the first test of 66. Let's see what happens at 66. Well, we immediately trade below it. So if sellers are strong, sellers are going to come up into the 80 area here, test the 80, test the 78, somewhere right around in there, and bring price back down again into the 67s, into lower lows. We haven't seen that yet. And so neither buyers nor sellers are strong in this market at this one given time in this present moment. Okay, that's the key, the present moment. Not what we think it's going to do in the future. What is it doing in the present moment? In the present moment, nobody's in control. Buyers or sellers, bulls or bears, nobody's in control. And we can see that easily looking at price action, right? Nobody's in control. Okay, not one side is actually in control tonight, right? Order flow is telling us where right now in the short term, in the moment, they're not, where they're trading around. Now, this is the first time we start breaking lows. See if we break the lows here with some momentum. I'm anticipating some momentum because of the 66, and there we go. That was the momentum I was looking for, testing into the 54s. Let's see if we get sellers to test into the 54s. If sellers are strong here with that momentum, we should continue and see a pullback or pull down into the 52, 54 area. If they're not, we're going to see a possible range of buyers back into the 80, 82 area, possibly the 78. Broke lows, didn't quite get into the 54, pretty close, 54 and a quarter. And now let's see if price action comes back up into the 68. 66, 68 area. If we don't get into the 66, 68 area and we reject from up there, which we're showing signs of doing, then I would anticipate sellers to break the low and get through 50 pretty quickly. These are things that we want to see if we want to see buyers or sellers getting aggressive, somebody actually taking the lead. Because right now, nobody is taking the lead in this market. Nobody. Oh, looking at these orders over here, I'm like, oh, what was I thinking? What was I thinking? I just didn't have my price action charts looking at it when I was looking at the entries. And I couldn't see it in the order flow. And so now we're in the 68s. Price action is now, buyers are showing strength at the 68. And then what happens? We come right back down into the 68, 66 area. Now, is that going to act as resistance, or is that going to stay and continue to be support? We're going to test in here into the 58 areas. There we go, printing into the 58s. Sellers are strong. We're going to break the lows of 50. Boom. There you go. There's your rotation of what you're looking for in order flow. Price action breaks the previous resistance of 66, 68, makes higher highs on very low volume around the 72s, comes back and tests the 58s. What do you think it's going to do? Break the lows of 50. Why? Because price action came up to test to see if buyers were there at the highs. No buyers were there. Eventually, this market's going to have to test lows. It just did, and immediately broke through them with momentum. Sellers are in control of the market tonight, at least in these areas. And so if you wanted to, as long as it's trading in this range, right? You're like, oh, well, it's trading in a range. What is it going to do? What is it going to do? It's going to trade in this range. Where's your support and resistance? There's your support. There's your resistance. There's your decision point. For the long side, there's your decision point for the low side. If price is rejecting in here, right around here in this area, off of these lows between the 60s and 40s for longs, targeting 29,000, 29.20. If it gets up here into this area, take your shorts. Where's your targets? 29,000 and a little bit lower where it's at right now, about the 70s. And trade the range. Trade the range until sellers come in. Break the lows. Pull back into. There's your place to go short through these lows, right? And then for your longs, same thing. Long. Continuation short. And what do you do in the meantime? Right out of these areas. Anticipating the range is going to continue. Because the market range is 70 to 80% of the time. It trends 20 to 30% of the time. It just so happens that we see a really strong trend right now. Okay? But if you go back and you look over a period of time, on any time frame, it doesn't matter. Range. Look, trending. How many days? April through May? What were you in the range for? You're in a range from September all the way through March. September to March, you're ranging. You're trending from April to May, and then you're in a range here in the first portion of May. So you're trending really from about here, April, all the way through July. You're trending, right? But you do have a range in here, and you have another range right here. All of this, range, trend, range, trend, trend, range, trend, range, trend, range, trend. And then this whole area here becomes a range, which with an extension to the downside here. This is last year when everybody thought that the market might crash and break down, was right here because we have a breakout signal here to the downside, right? That immediately rejected and started to trend. And that trend lasted for quite some time, from April until about October timeframe, with some ranges in that time frame, but primarily a trending higher market condition. And then in October, we started to range again, until we started the trend in March. Now March and May, we're trending with the range now. But when you look at those time frames, even with this huge, trending time frame here, look at all this range time in here from July all the way to March, when it started to trend lower. And really, even in that context, this is still in the same range extension here to the downside. There's still range because we pop back up again. We didn't really start the trend until we broke out of this range here, which didn't happen until right about here. So technically, being in a trending market, we really didn't hit the trend until here, which brought us right back into a range again. Looking back, we can say, okay, well, higher highs, higher lows, but look, range. And why back here? That's where the breakout happened. Because all of this just went from trend to range, trend to range. Trend, it's not a clean trend. This is what we would call a forced trend. This, very clean trend. Very clean trend. This is a very much forced trend. What's the difference between the two? Volatility. Look at how your average daily range, look at how it's expanded here significantly. Look how it expanded here on this inflection point, right? This right here was a decision point in the market. How do we know? Look at the average daily range. This isn't volume. Look at the average daily range of the daily chart. It expanded significantly in this period of time. Then the price action fails the breakout down and starts to do what we call a forced trend on what? Very low average daily ranges. And then what happens? The market wakes up, and now our average daily range increases, decreases again in this little bit of a range, and then the trend starts, and boom, big ranges. And this right here is telling us that the market's getting ready to wake up. Just like this areas over here was telling us, hey, look, the market's getting ready to wake up. Same thing. Let me get rid of all of my designs here because I can't see anything. And so what? Price action came in, made this low here in this area, this rejection area, right? Tested here. There's your long, looking for 29,000, 29,020, and trade the range. Move your stop to a break even because we're not accepting higher prices up here yet. So be careful with risk, but there's your entry. When it comes back and tests this wick. Why? Because it's a wick? No, because there was resistance there. Or not, I'm sorry, because there was support there. There was rejection. Rejected from an area that makes sense in the context of auction market theory. Same reason why I was looking at this area, do the same thing. Right? We just haven't seen the lift in price action yet. And the longer we stay down here and we don't see the lift, the higher the probability that sellers are going to take these lows out. Because we're not seeing buyers take the highs out. And somebody eventually is going to take control. Question is who? Until that happens, play your plan. Let your plan play out. Entries in this area in here. Target. Entries in this area in here. Target. Were you wrong? Stop up here. Stop down here. Let's see if value area low acts as resistance again, which it has been. Or see if we start trading into value. And if we continue to trade in this area like it is, that's going to shift value area low lower and value area high lower, and it's going to start to collapse and narrow a bit because we're starting to spend more time down here. When price action stays around an area with more time, there's also more volume. And so time and volume of trading in here will shift this profile and make it more narrow, or shift down your value area low, which shifts down your value area high. And then your VPOC, depending on what, how long price actually stays in this range, can shift as well. And this is what I mean by developing profiles. And there's not a lot of software out there that allows you to draw these types of profiles on intraday ranges, especially in a range that's currently developing. And that's what we call this, as a developing value area. If I had a value area back here like this one here, let's say if I drew another volume profile down here, for example, right? I had one here before. Let's say there, that's a static profile, right? Because it's not connected to current price. Current price is connected to this one, and so it's static. So this is developing, and this is that profile based upon this time frame. Give me a couple days to get used to this whole streaming thing. Give me a couple days of getting my parts in order. Stop trying to, appease everybody in the platform that they're in, and allow me to step back into my groove. Again, it has been since 2000. The last trade I took was in 2019. Okay, so it's been a while for me. I traded full time from 2008 to 2019, and I am just now starting to get back into it. So give me this week to acclimatize. I went to Okinawa with the Marine Corps, and one of the things that we did when we got into Japan was we took 5 days of just sleeping in a tent outside, acclimatizing to the higher temperatures, right? And so anytime you walk in to do something new, like I'm doing here, we have to acclimatize. And see, failing the highs, what are we going to do? Test the lows. And now we have momentum of sellers coming in, testing the lows. Now, is this going to be another area of rejection, or are sellers actually going to come in here aggressively and start taking out these lows? If they do, we get a close below, pull back. There's a reason to go short for a range extension to the downside that could possibly bring us to the 28, the 880s, possibly all the way down here to the 700s. And from the daily chart perspective, there's your 28s down in here as possible support. And then we don't really have any other support until the 27s, 26s. And then we could be trading back down in here as these targets for the 25, 26s. But, now you're breaking a lot of lows to do that. I'm not saying the market's going to do that. What I'm saying is there's definitely room to the downside. We don't want to call a high by any stretch of the imagination. But for the short term, and just in the context of the short term, and looking at the short term, if price action breaks below this range, closes below it strongly, pulls back into a reason to go short. Until then, there's reasons to be long through this area, anticipating 29s, big at 29 and the 2920s. one good thing about the market profile too, and you'll see this over time if you're watching me. When we're dealing with the market profile, we always know where we're at in the market and what we anticipate the market to do. If the market's failing at value area high, anticipate lows to be taken out. I'm sorry. If price action is failing at value area low, anticipate lows to be taken out. If price action is failing at value area high and unfair highs, and is failing to get back below value area high, then anticipate the highs to be taken out because sellers are not participating in the auction at these prices. Buyers are not participating in the auction at these higher prices. And normally I won't be on my phone like this either when I'm trading. But I do have something going on in my personal life at the moment. I don't, but others do, and I'm paying attention to that too. So here's the potential breakout, right? This is either this is either going to be a failed extension, a breakout, or a failed breakout. So what's the difference? A failed extension is going to be a bar that's going to trade through here, doesn't close below, rejects someplace in this area, comes back into the area, and price action moves higher. Okay? That would be a failed extension. A breakout would be a bar closing below this area. A false breakout would be a bar closing in this area on a strong close, and then buyers coming back up and moving through price. Give you an example. This false breakout. Okay. This isn't even a breakout. This is actually a false range extension. Range extension lower, false because price action didn't continue to break through the range. Okay. This was a range extension lower. Okay. Buyers tried to step in. And then here we broke the range with a strong close. That's a breakout and it failed. And so here, right now, this is showing signs of being a failed extension. Why? Closing about to the half portion of the range of this bar. Okay. Not near its low. That's a failed range extension. Okay. This is where stops could be hit and all sorts of stuff. And then price action now turns around and has the buyers or the buying force of other time frames coming into this market, pushing price back up into the 29s to 29.20s. Oh, I might use these being in all the time either. I might use my headphones. We'll see. Any questions? Any observations? And I am writing a book for this. This book is, right now, it's over 100,000 words. It's about over 500 pages long. I'm thinking about possibly paring that down because there's so much information in it. But it goes through candles, just regular price action, and then it goes into everything about auction market theory, and then it goes into execution in various different market conditions. And it's all about auction market theory, price action, and order flow. Nothing about psychology, nothing about anything else, just how do you read the market and not through indicators. Because all indicators are lagging. I don't care what anybody says. There are no leading indicators out there. Even price is not a leading indicator. Price, happens like right now in this moment. 68 is meaningful, but 67.5 is no longer meaningful. Okay. This close at 28 or 940, for example, right? This was meaningful down here. It's lost its meaning when it came up here. So there are no leading indicators. Volume, not a leading indicator. Price, not a leading indicator. Fundamentals, not leading indicators. There are no leading indicators. That's a lie. That's like going into Vegas, into a casino, and saying, okay, I'm going to sit at the slot machine and I have an edge. Or I'm going to sit at a roulette table and bet red and black and I have an edge. No, you don't. There is no edge. Not in that context. Why? Why is there no edge? There's no edge because the house always has an advantage. Vegas was not built on people winning. Vegas was built on the house winning. Every casino was built and stays open because the house wins. And they have other things going on to bring the masses into their casino. The casinos that fail are the ones that can't get the business into the doors in the first place. That's the only reason why they fail. They pushed it down a little bit. I don't know if you noticed that or not. Value area low shifted down a little bit, but there you go. See, you got the lows, failed range extension, immediately start coming up. What we were anticipating to happen back here happens a little bit later. So this really goes into the idea of very rarely wrong, sometimes early. And I was definitely early tonight. I was way early up here, way early. Oh, but I didn't see this chart when I was doing that. And then here, by the time all of that stuff happened, I just wasn't interested in trading anymore. These right here, these were all tests. That's all they were. I'm just testing my dome, trying to make sure my orders are accurate. That way tomorrow I can come in here fresh and ready to go. And if there's no other questions tonight, I think I'm going to go ahead and jump off the stream here. I don't really have anything else to go over with this. The price action is trading in a range, and it's going to continue to do such until something happens and there's actually a breakout. False breakout here. I identified that false breakout, the live edge. Said, with it closing where it's at, that's a false breakout. This bar didn't pull back very much, and it immediately started trading higher. What do I anticipate price action to do now? Continue to move higher into VPOC, into value area high, targeting the 29s, the FIG, and the 20s. My perspective hasn't changed at all tonight. Not once has my perspective changed. Not once has my plan changed. I did move my chart over here and lost track of my price action chart, which got me looking for entries directly off of my auction or my order flow, which is never a good thing. Order flow is good at timing you into the markets, like I showed earlier with this move here, right? It was actually this move when I was talking about price action coming down and testing, and where the areas I was looking at testing where buyers were, right? This right here is exactly where the prime entry was, and order flow guided into that entry, where price action here doesn't give you any guides other than you're in the area. And just trading around areas off of price action is not enough to determine entries like this. That's why we want to use order flow to pinpoint our entries into these areas. And then here, false breakout, look for potential longs, holding this low as your stop. And I just didn't go that deep into this right here because in my mind, I was already done trading for the night. And on that note, I hope everybody has an amazing evening. I look forward to working with everybody moving into the future. If you are interested in becoming a consistently profitable trader or professional trader, then I invite you to come in to learn, ask questions. I will teach you how to break down these charts no differently than I just broke them down tonight. I will give you all the knowledge and information you need in being able to read this type of price action so you can trade with it instead of saying, oh, well, it's a ranging market. I don't know what I'm doing. And then once we do get into a trend, I can show you how to move into that development as well. And pretty close to final target on the short time frames, and they're touched. And there it is. That, ladies and gentlemen, is how you trade ranges. That's it. They're not difficult. It's not difficult stuff. You just got to be able to see it so you can plan for it and anticipate so you can confirm and execute. And make sure your execution is coming from the present moment. So conscious intention is online. Is conscious intention and subconscious processes and conditioning cannot activate and be active at the same time. One or the other is active, and only one. So if you are in the present moment, conscious intention is a predecessor for action. If you're not connected to the present moment and you're triggered, subconscious processes are the predicator to action. And not just the predicator to action, but also determines perception. And what you perceive determines your whole view of reality. And if your perception is controlled by subconscious processes, you don't even know what's driving your action. Hope everybody has a wonderful evening. I wish you all the best. Happy trading. And I look forward to seeing you all in future streams. Thanks, everyone. Enjoy.